And welcome to another edition of the Nerdy Agent Podcast. I'm your host, Luke Pedersen, with my brothers and fellow nerds. Today would be next week. And so, in beautiful fashion, Carson Wentz is now the best quarterback in the NFL for the next 3 weeks. The Vikings are going to be 4-1, and then he's going to be absolutely terrible.
This is our
But we just signed Max Brosmer, so maybe...
No, we already have Brosmer. We signed another different guy. Bengals guy or something.
Oh, we already had him, but he's now moved off the practice squad, I think.
No, we signed a new back. We signed a new backup.
Oh, another guy. So Max Brosmer then in week 6.
Desmond Ritter, there you go.
Oh,
he was a third-round pick years ago.
Desmond Ritter?
Yeah.
Do you know who's going to be really good for the Vikings when Carson Wentz gets hurt? It's Desmond Ritter.
This is my concern. So
KOC can make Desmond Ritter Sam Darnold.
Okay, so sidebar, guys.
Or possibly...
Two things, okay? Two things. One, how did Carson Wentz only cost $1 million? I looked up his career stats. It's like a 96 quarterback rating.
Oh, he's really
We're gonna find out on Sunday why he comes.
Okay. So and then next
Carson Wentz.
True concern though, Luke.
How much you want to bet he throws for 2 touchdowns? He'll throw for 250 and 2 touchdowns, I bet.
I hope so. That'd be great.
Yeah, and we'll find out that we don't need Aaron Jones anymore. Jordan Mason.
A total sidebar, you guys, is that not even a sidebar. It's on task. On topic. There is some concern. The reason they signed Desmond Ritter is they don't think Brosmer is ready to get into the NFL.
100%.
And also, Josh, I think we're playing our third string left tackle, and our center is out as well.
That's an issue.
And that's why McCarthy looks, I mean, he's young, but he was running
hit from liability. That's an issue.
So, Desmond Ritter was drafted in the 3rd round by the Falcons.
Yeah.
He was traded to the Cardinals when they signed Kirk Cousins. So this is a full circle moment, right? He didn't make Arizona's 53-man roster. He was on the practice squad. He got signed by the Raiders off of their practice squad and actually played last year for Las Vegas. Then he got dropped by the Raiders and signed by the Bengals and didn't make the Bengals roster. And then their quarterback got hurt, but they had signed somebody else. And now the Vikings have signed him.
The Bengals quarterback got hurt.
That's a little bit of a carousel there, Hunter Burrow.
Yeah.
He's good.
Maybe he's Case Keenum.
Maybe he's... Yeah, I think that Carson Wentz is our Nick Foles. That's full circle.
You know, guys, we are the nerdy agents, and about nerdy things.
Just
hold on. I will tell you that if we are supposed to be credible in our statistical skills and things with math and numbers,
We can't be biased.
we probably should acknowledge the probability that Desmond Ritter will be good is very low.
Carson Wentz.
No one else will
He's
want
not going to play for us.
Carson Wentz, though, is actually a legitimate quarterback.
Carson Wentz is a legitimate quarterback. If we were looking at statistics, as far as how sports end up playing out, it doesn't work that way. Nick Foles won a Super Bowl. Nobody would have thought so.
You know who's quarterbacking the Fed right now? Still,
Jerome Powell. All right, let's talk about the Fed. So yesterday the Fed came out and they cut the overnight rate 25 bips. What happened when they did that?
Market went down.
The stock market went down.
Because mostly, you guys, this is like why, and rates went up. 30-year fixed interest rates went up. This is why when you have clients that ask you, isn't the Fed about to cut the rates? Won't the mortgage rates go down? No, it depends on the expectation of them cutting the rates, what they do, and then their future outlook. And what you saw is that they said they see 2 more cuts for this year, and they see 1 cut for 2026. That's what Powell said. I'm almost positive. That was less cutting than the expectation was going.
What was the expectation they were going to cut to yesterday?
25 basis.
It was,
but it's the future, I think, where they
after the CPI data came in, everyone basically said this is what's going to happen. So nothing was outside of the expectations,
except for the future.
The one guy.
No, and except for the future expectation of the cuts, because I believe they thought there was going to be at least an additional 2 or 3 cuts next year, and they came out and said, nope, we're just going to do that. We're predicting 1 cut in 2026.
They say that.
Yep. And so interest rates, 30-year fixed interest rates, actually went up almost 10 basis points yesterday. They got to a low of like 6.13 according to Mortgages Daily. I think they're at like 6.22.
To reiterate this, if you've missed the other podcast or if you don't know, the secondary market is pricing in what they think is going to happen with the overnight rate and all these other items in the economy, like 6 to 12 months out.
Yes.
So they were already baking in what they thought was going to happen and what they thought he was going to say was going to happen later, and then it wasn't exactly what they thought.
Think about most.
That's why they go up.
Think about most decisions you make in your life. You are predicting what is going to be happening in the future and making decisions now based on what you think is going to happen in the future. That is how our markets work in this capacity. When something actually happens, like a 25 basis point cut, mortgage rates have already been impacted with what people thought was going to happen in the future. But if they would have said it's 50 basis points, we would have seen a more drastic swing in mortgage rates because it's outside of the realm of what they thought was going to happen. But as we predicted last time, and I feel, pretty confident will continue at least through his term, Powell's always trying to just be kind of in between. He's saying something, he's doing something on the other side. He's always trying to keep things a little steady. And with inflation still being a challenge and not coming in exactly where they want it to be, and with unemployment rates rising and jobs reports looking bleak, there's concern about the economic components outside of just the rates.
And it's a high unemployment and high inflation is what happened in the 1980s.
It's a really bad thing.
And it takes a really long time to recover from recessions like that. So that's why they're trying to control us.
What are we at for unemployment right now?
4.5%.
And that's considered to be target.
4% is full employment. So we have less employment than we want, but we also have inflation higher than we want.
What's high employment? What did we run into in the 80s?
I'm just saying, so if we start stating employment in pre-AI and post-AI eras,
It's really different, yeah. But what was the 1980s unemployment to be considered high, and what was the inflation number to be considered high?
Unemployment peaked in the 80s at 10.8%.
Okay, so we'd have to see likely a doubling of the unemployment to get to something like that.
Yeah, it's really
the metric in which they track unemployment rate was double.
Overnight interest rates. Guess what they rose to in the 1980s? Right now, for reference, I think they're at 3.75 right now.
No, they're
5.75.
They're in the fours. It's 4 to 4.25.
Is that what it is now? Okay. What did it peak at?
7 or 8.
20.
Whoa.
20%.
Overnight rate. I would lend everyone my money overnight for 20%.
20%. But then it screws up a lot of different marketplaces too, because you get there's a lot of weakening of the dollar happening. There's a lot of different things that are occurring.
Were the mortgage rates lower than the overnight lending rate?
I think they actually got up at that high at one point potentially. I know people talk about like 18%. I'm sure this was like a 1 month type thing where they just went up like super, super high. It was Paul Volcker that was running the Fed at the time. This is what Gemini is telling me. Sought to control by raising interest rates to nearly 20%. So, wow, pretty crazy. Unemployment at 10.8. I mean, that's, yeah.
So 25 bip cut. Then they said the expectation on what they said was they're going to cut it less than what people were thinking.
The highest all-time mortgage rate was 18.5%, 1981.
Let's discuss what the future of the Fed board and chair is going to look like. Remind me when Powell's term is up.
May of 2026, and
he will no longer be the chair, basically,
unless he makes friends with the president.
I don't think he will. That's what's going to happen. And one of the more left-leaning, if you will, Federal Reserve Board people recently resigned without any reason, which was a little bit mysterious, and has now been replaced by Trump's, I want to say, Deputy Secretary of Economics.
Which he's the one that they had lined up for the person they're trying to fire.
Yeah, but they got another one, I think.
Yeah, I saw his name and I was like, how did he get on the board? They haven't got fired yet.
Because Lisa Cook actually, that thing didn't work. Like they didn't fire her, and they said that the banks both said that I think they both said like we know about this.
They essentially said that this woman bought a second home with a primary mortgage or something.
This is all media reporting now, so I don't understand this. But Besant, which is like one of Trump's right-hand guys, actually was accused of the exact same thing at one point. So it's kind of interesting just to follow different articles and different things of what's happening here, what they're trying to do. But yes, Lisa Cook has been allowed to remain, and I believe her term is like a couple more years, 4 more years maybe or something. I think their terms are super long to avoid what we believe this administration is trying to do, which is basically just stack the deck with people that they get to a point and then they can make the decision on it.
And now there are people looking into the other person who resigns records and purchases and mortgages and all that stuff.
And so they added this guy, right? And if you didn't know, we talked about this a couple weeks ago, but the Fed essentially will vote on what they want to do
for the rate that day. And then they all come in and they all say, here's what our future expectations are. Here's what I think we should do. When they get together, they talk, there's a write up, and then there's like a dot plot.
And when they did the 25 basis point cut, every single person except this one guy agreed.
Correct. He wanted 50.
He also, his future rates that was the wild one, where he thinks we should go. Everyone else was like, we're pretty close to where you need to be. He's like, not even close.
Yep. He said,
So he has us at his projected like outcome. Most people are between like 3.5 and 4.5 for every other person. And he's like, we should be sub 3.
mm-hmm. And Trump wants to be between 2.25 and 2.5. But they don't know. They said likely him, Josh, because the dot plot is anonymous, which is kind of funny. And we can, plug this link in here so you guys can see this. But there's one person who wanted to be 4.25 to 4.5, so keep it the same. Then there's a smattering of people between 4 and 4.25. There's 2 between 3.75 and 4. There's about 8 between 3.5 and 3.75. Then there's likely Moran, who's the guy that just got put in here at 2.75 to 3, and then there's Trump at 2.25 to 2.5. So Trump believes that the rate should actually be half of what the top person believes it should be at. Super fascinating to follow, and I've actually read some long blurbs about this Moran guy and what he's talked about, kind of what his goal is, and there's a lot of back and forth on should we weaken the dollar, should we strengthen the dollar, like how does all that work? We haven't gotten to that. That's like super crazy nerdy stuff. But yeah, I mean, very out of bounds for whatever else wants to do.
Well, and we're in a situation where you could argue that it's something that never's really been seen to an extent.
Yeah.
We saw in the 80s a little bit, but I mentioned this last time. What's the name of the economic theory again? Keynesian theory. I was listening to Economics Daily or something, a podcast that talks about it with economists, and they said based on the Keynesian theory, we should be 100 basis points lower than where we are right now, based on all of the data on the market. But it's not, we're not in the same market. The world is changing with AI, with technology, with how fast stuff is happening. So is that theory still correct today?
Sure.
That's part of this descent, I think. I mean, obviously it's trying to stack the board and just lower them so stuff looks good. But technically, they don't really know. We've never dealt with this.
There's an economic disagreement amongst a lot of different people of what should happen, and should we still use the old way we did it to do what we're doing, or is this a new market where we need to think about it differently?
But at a high level, they did what we thought they'd do. Rates have not moved. In fact, they've moved up a little bit, but roughly are still in the 6.25 range. And we're going to continue to get more data throughout the rest of this year to determine if this is going to continue to come down. I do think, as people are thinking about things, because there are already lenders that are pounding on doors and saying, refi, refi, refi. I had a call with a friend in a different state the other day. And my advice to him was, I would be patient and continue to watch the momentum of rates moving down in the short term if I was thinking about refinancing. But if I'm a buyer right now and I'm wanting to be active on the market, it does seem like this is a good pocket to take advantage of the fact that the rates have come down already, and buy before any sort of uptick in activity happens.
Seasonal uptick in activity.
Seasonal, but also like there's economic kind of turmoil, I feel like, a little bit right now, where in Q4 it's the combination of seasonal stuff and the people being like, I don't know, I'm not hearing great news, and there's all this other stuff happening politically, and it's just making me want to sit still. Like listings right now are just a little bit slow in terms of getting buyers for them, but I anticipate, barring big changes in the economic data that we get in inflation and jobs for the next 3 months, that come spring, or even like, early 2026, January, February, which is definitely not spring in Minnesota, that activity is going to start spiking back up.
I'd be hard pressed to think that January through May is not going to be bonkers in the Twin Cities.
We'd have to see something catastrophic.
My assumption would be that it might be more competitive than what it was this year.
I'd say that's a fair estimate for sure.
And yeah, just a note. I'm talking to my first-time home buyers about this a lot right now. If you have a lease, please read your lease terms. Or if you're an agent, if someone reaches out, figure out what your buyout is, because you might go, I don't want to buy out of my lease, but it's $5,000. But then you might go, well, if I find something in November on Thanksgiving week, I might get 3% seller paid closing costs. I can use that money to shuffle it in to buy out my lease. And you might instead wait until May 1st when your lease is up, and you're going to be in 5 to 10 offers on every house you're competing against. It's going to be almost impossible.
And if you had buyers that were trying to buy in the summer that just are like, I kind of backed off, right? Like I have people that were like, they were looking when the market was at 7% rates. And so their payments that they're thinking in their head that they're going to have have now at 75 bips difference changed dramatically, right? If you're buying at $500,000 and the rate comes out of 7 to 6.25, you're going, oh, this is actually far more palatable. I had a conversation with our team yesterday on that, where they were looking at 680 when it was at 7%, and now they're like, well, 740 seems too high. I'm like, their payments could be lower because the market rates had actually impacted those payments pretty significantly.
Yes, absolutely. And I think you're seeing that, like the little bit lower demand and a little bit better rates might be a decent time to get people fired up for Q4.
That's all we have this week on the Nerdy Agent Podcast. And as always, remember,